All right, today we saw the yield market collapse. And if I was just to ask a guess, right, what do you think happens when the yield market falls? We've been talking about this for a couple while, right? And we've seen rising yields, right? What happens to gold when yield falls? What happens to DXY when yield falls? I'm going to give you a minute to answer that, or 20 seconds. And absolutely right, you're correct, right? Yield falls, then the dollar falls, and risk assets would see a rise. Today we had the CPI print, and I'm thrilled, I'm excited, right? Even though what I wanted to see did not play out. And this is one of the things I like to talk about, especially when somebody's trying to learn from me or someone trying to gain my insight on trading. It's not all about how to get into buys and sells. I know you hear that a lot, but it's also when you are not doing anything, it's also the conditions, the time and conditions, right, that you make decisions, right? What am I doing right now? And even though I see this thing as a play, is it the right time to be engaging? Right. And many times you will take yourself out of uncomfortable situations if you just do nothing when you're not supposed to, right? And one of those days was today, which is we have CPI coming in, New York session. Why trade London session? Why trade before CPI? Especially because it's a news release that changes the dynamic of things, and nobody really knows what the CPI print is going to be. Nobody really knows. That's why we all await the news. And that's why even before the news release, you see that your major pairs consolidate. There's zero volatility right before the news, and the news really brings in volatility. So let's look at what we had. We had for CPI today, right at 130, right? This was 130, 830 here. We saw yield market fall off, obviously, as you have guessed, right? We saw the gold market, we saw the gold market also expand, voraciously, right? We saw the DXY run lower, right? We saw the currencies also expand higher, right? And that was because of something. And remember, we talked about it yesterday. What do we want to see? Do we want to see hot inflation or cooler inflation? And I want to really explain that. Um, All right, I'm doing verification for my account. That's it. Account passed, but that's not what we are here to look for. Let's go into the calendar. All right. So July 13, 14. Okay, let me cancel this. So this was the news release today. Right, and as you can see from the numbers, right, the red already just tells you, right, it was negative impact, right? So we have hot inflation, that means we have higher numbers than forecasted. You see forecast here, right? And we have cool inflation, we have lower numbers than forecasted. So it means that inflation, right, became cooler than expected. All year we've been having heightened inflation up until last month where we started to see the inflation numbers drop, and CPI for the first time this year, right, comes in very, very, very bad, right? This is a surprise because if it's so interesting, I'm going to explain it, but look at this, right? We had 0.0% for core CPI month over month, meaning last month, right, inflation numbers, it was expected to be 0.2%. But what we had was a cooler inflation. Cooler inflation, write it down, means bearish dollar. Cooler inflation means bearish dollar because the Feds are more likely to cut rates. That's why you see your yield markets going lower. Right. So if the Feds are more likely to cut rates, yield market is going lower, dollar chases yield, dollar goes lower, right? Risk assets would rise, gold would rise in that environment. Your stock market will rise in that environment, right? And all of your other risk assets would see a pump. Your currency assets, your foreign markets like GBP USD, and Euro USD would see a rise, which is what we saw today, right? Year over year CPI also, the prints came in lower than expected, meaning that the expectation of Fed hikes is being reduced here. We're now looking at, oh, rates are, it's possible we have rate cuts coming in soon. This is what this information tells you, and that's why this is important. Right. And I was watching the Fed chairman Walsh, Kevin Walsh, talk today. He was testifying against, the committee today. And there's a whole lot there, but I don't want to unpack it here. But what I want you to know is this is a huge driver to everything that we want to see. And the reason why this is interesting is because we had a surprise today. And this is where the market sees expansions from when there is a surprise. What is the surprise? Let's go back to price. If you think about it, right, going into the weekend last week, we saw that ceasefire news, which is, we're now the war is coming, the war is coming to an end, and the war is coming to an end, and there are now peace talks. The Strait of Hormuz is now being opened. Those have been happening. It's been happening for weeks now. But going into last week, we started to see the news release talk about Iran, closing the Strait of Hormuz, and Trump actually bombing some certain places in Iran. What does that mean? That means that we have inflation problem again. If the Strait of Hormuz is being closed, like I explained yesterday, then it means we're going to see expansion with US oil. We're going to see oil run higher because supply is now being skewed. So demand will go up, oil will go up. So that was what happened during the weekend. See, Sunday opening, boom, we gapped up and we expanded lower. That's why we saw gold run lower. Also, we saw DXY run higher. That was what happened going into yesterday. So what do you think the expectations of, anyone trading would be? Even mine, right? Even my expectation is, oh, we're seeing that, all of this trouble is coming again. So the easiest analysis to make is that we will have a higher print for CPI because inflation is hot. And that's why it was a surprise to the market. When there's a surprise, we would see expansion. If we had higher inflation than normal, what would have happened today would have been trickle, would have been that, gold would just run lower. It would not expand so much. It's just, trickle lower. If we saw that, oh, CPI came in higher than expected, because it's not going to be a surprise, because we already know that story that, oh, inflation is hot because there's problems with Iran and US. But even with that, we see that inflation is not hot. It's coming in cooler than expected. So the market reacts violently to that. And this just tells you that we don't really have a certainty on the things that happens, right? The inflation numbers that you see today are the accumulation of everything that's happened in the past month. The news that happened for this, or the reason for these sales pumping in going into yesterday, just happened last weekend. And maybe it's going to continue. We don't know. But the CPI print is, let me take this off. The CPI print is for the last month, it's for the last year. So cumulatively, we don't know what those numbers are. And the reason why I've gone in depth to explain this for the past few minutes, right? It's not the most interesting of topics, but I love it. I love fundamental analysis. It gives rise to understanding what is actually happening on policy base with your currencies, your assets, and all of that. But the reason why I've gone deep dive to explain this is, in a news event like CPI, you can really avoid guessing what will happen with it. You can really avoid. I had, one of my members actually buy gold here and buy GU at the same point. Good trade. But instead of guessing that, there's a way to do this, right? And I'll tell you, right? But instead of guessing this, what I like to do is I wait until after CPI and I access the information. There's an idea that, the market sells on the market does opposite to what the news says, right? But even that idea is one that happens after. So you see, bad CPI, gold rallies as it should, DXY falls as it should, right? But look at what happens after CPI. We start to see gold start to go lower. But my main discussion of today is you don't need to put yourself in conditions where your probability of winning is low. You can just avoid it. Nothing will happen. You would not just make money. And if you trade prop firms like I do, you are not even allowed on many of the prop firms to take trades out minutes before and minutes after this candle. So you really don't have, anything to do. The only way you can trade a CPI print, NFP print, or FOMC, if you really, really have, maybe this level as a level where you want to see price rally higher. Maybe you were thinking about it like this, that, oh, okay, because it's actually good if we look at it. We had a bullish order block down here. We had a bullish order block. So maybe coming in today, you saw this as, we can see price return back into premium before we might even start to go lower. And because of that, you want to buy that CPI print that will take price there, because the truth is, no matter where price goes to, it would still aim for areas of liquidity and inefficiencies. So if you wanted to see that, the way to do it is you take $100, you take $200, you take $500, whatever is comfortable, right? The risk that you want to take, and you put it on a separate account. It's going to be your account where you trade these things, and then you leverage on that account. It's like, oh, I want to risk $500, or I want to risk $100 on this trade to make 300, to make $400, whatever it might be, right? And you put it on a separate account, and then you trade that. So if you lose that, you lose. And the reason for that is, if you have ever been spiked from CPI NFP, you know what I'm saying. You set your stops and they dap your stops. And what you're supposed to lose $100 for, you then lose 1,000. You then lose $700. So you don't want to put yourself in that situation. So if you ever would want to trade this because you know what is happening, right? I'm not against anyone trading CPI, right? There are certain CPIs and NFPs that I've looked at, and they're like, they're so clean. Maybe I've traded one or two of them, but you can see how I'm even stuttering, because my biggest losses have been trading news releases, especially NFP. So I learned by consistent wiping not to do it, right? You can just wait until after. You can wait until the next day. Waiting is a better position than losing money, right? And the reason why I wait is the probability of me winning at that point is low. So why push my edge there? Doesn't matter. So this is the main core of this video, because I did not take any trade today, right? I'm going to share my outlook very soon, right? But I did not take any trade. But the core of this video is understanding, right, areas and conditions where you need to do nothing. And this is, many times what goes on in the mentorship that I run, right? Helping traders, because these traders already know how to trade. They have been in the business for a while, but helping them understand with experience the conditions when not to do something, and when to leverage position, when to make more money. Your core, what makes you a great trader is to be able to minimize the downside and maximize the upside. That's it. And to do that, you need to understand conditions. So it's been a very great day for me. I put on zero trade today, right? I had speculations, like I told you. I wanted to see this fair value gap. I wanted to see this order block. But as you can see, the CPI release made those levels invalid. So it puts me in a space where I'm, again, thinking about what can happen. So I'm going to have a fresh chart, right? And just show you do some type of technical analysis. There is nothing in here on the weekly time frame that says we are now bullish. That's the first thing. There's nothing in here that says we're now bullish. So I come back to seeing this level as a drop. That weekly low, as I started the week looking at, I would still look at this as a drop, right? The CPI print, in my experience, is a manipulation to distribution news release, where we see the CPI go one direction and then we see the next direction on the other side, right? So I'm still believing that, even though fundamentally we are getting a story of inflation numbers being reduced. Now, whether it's going to affect price right immediately or not is something that we don't fully know about, but we can see what the numbers are saying, and the numbers are not saying that DXY is bullish. Because if that was it, we would have had higher than expected numbers for CPI. Right, we're seeing lower numbers, and some of the numbers we've seen, in recent weeks have been tilting towards lower dollar than higher dollar. So we need to really, really, really be careful of that. And if we're seeing higher dollar, we're seeing lower dollar, right, then we can see higher gold. This is very important. But up until now, looking on the higher time frame, nothing has really still said it's time for this buy side. In my view, it's almost time. If we keep getting numbers that support lower prices for the dollar, then we're going to see gold actually rally higher. You see that when DXY goes lower, gold is the most active. When DXY is going lower, gold doesn't wait. It just pushes. It just expands. It just expands. It just expands. All right. So it's very, very important to watch for that. But before I would do that, I want to see a break. I want to see we've been going lower for a while. Right. So on this time frame, what do you still see? Lower highs, lower lows. We're still in a bearish market structure. So I still have my eyes on this level, right? There, we just returned back into a bearish order block, the midpoint of that, and a gap. So this is still very okay to send price lower, right? When I would start to, give up on the sell side of gold, right? And give up meaning in idea phase. I don't have any trade positions on right now, right? But idea phase, when I'll start to give up on gold is when we start to close above this level. When we start to close above this high, that would kind of be like when we start to do something like this. Let's brush, not this, brush. When we start to do something like this, right? Yeah. So something like that. That's when I would, start to consider, some type of some bullish outlook on gold, right? But for right now, it still seems bearish. Now, am I as strongly bearish as I was, some days back? Not so much. Not so much. But seeing how, the day ended yesterday, look at it. Well, we just returned back into the premium part of this range, right? And we're seeing, price just leave that level beautifully. All right, so if we see follow through, which I'd like to see, I would like to see it close to this fair value gap. That would give me, more reasons to look for more sell positions on gold. But for right now, I'm still neutral here. I feel like we can go higher, right? But again, I'm not doing anything with that until probably we start to see breaks above these highs. But for right now, right, everything is still bearish market structure. So gun to my head, I would still be looking for sales down to this level, right? So, and the reason you might ask, why are you still bearish gold since we have seen that inflation is coming lower? It's because we don't know if there's been another round of hiking inflation happening. The one that started last weekend, we don't know if that is still working. Remember, the news driver was just was talking about the last week or the last month's data, but something started last week, and oil is showing that we still have inflation problems with oil because oil is back to $80 per barrel. And if this continues to move higher, what will happen to CPI or what will happen to inflation? Inflation would get, will get crazy, will get hot, right? I remember CPI is just one news release. Today, we have PPI happening, which is the second inflation release. There are three inflation releases: CPI, PPI, PCE. The accumulation of these three releases tells us exactly what inflation is saying. So I'm looking at this, and my thoughts and processes is if we start to close above this gap, then we are having inflation problem again. And that would mean that the Feds will have to keep rates up. We would see yield markets continue to go higher. So just like we saw yield markets, go lower here some couple of weeks back, right? And it was just, a retracement for a bigger level. This can be a retracement to a bigger level also if we still have those inflation problems, with Iran, and that would mean oil stays higher. I know I'm speaking a whole lot of knowledge, but this is the best and best way I've been able to engage gold and do all of the things I've done. It's because of this understanding. I just play it bit by bit. The understanding comes first, and then I play alongside with it, right? If we look at US, if we look at the 2-year yield, we got to a bearish order block. So you can say, well, maybe we've ended the tenure of buy side and we're going lower, although there's still buy side liquidity here, right? So technically, it's good to go lower, but we have not started to show that it's time. What do I mean? Willingness in a direction is one of the reasons I want to engage any pair. Not just, oh, the reference points, but are we seeing willingness in that direction? What that means is breaking market structure. So, yeah. So, back to gold, right? That would mean that I want to see, that would mean that if we're going to see lower prices on yield, we're going to see higher prices on gold. Very straightforward, right? But for right now, everything still looks bullish. Everything still looks bearish, right? We've not seen any major high. Even with this, we did not see any major high being taken. So tomorrow I would go in and kind of like look at what things do. I want more candles to make a decision at this point. We have price returning back into this bearish order block here. All right, up close candle, run lower, and there's a gap. So retest that gap, right? The opening gap of the week. And then what happens is if we see price close through it, then it means that buy side, is in control and we can see continuous buy side. But if we see price stay below this gap, then we are still very much bearish. So I think that's simple enough. That's straightforward, right? And that's what I'll be watching for this, right? If that happens, right? Let's look at the XY for a little bit. For DXY, look at what happened with DXY. Very, very interesting also. We returned back into that breaker. I didn't want to see this for the breaker. When price was here first, going into the week, 3rd of July, I wanted to see price come down into the bodies of this breaker properly. Right. But that did not happen. And I was already, on with the idea that we would see buy side. And that's why I say that if I was trading today, I would have been whipped. But there was no way I could have been trading. There was no way. I didn't have any reason to put on a position today. If I was going to, it was going to be after CPI. And after CPI played out, my ideas were already disrespected. So what do I need to do? Nothing. Until I can make up new ideas that I want to engage, there's nothing to do. All right. And these small things are the things that, prime up your decision as a trader to be able to do the business properly. Right. So we took out the lows, but again, we're not staying lower here. Right. One of the things one of my members, Muiwa, talked about on the call today was the fact that he's looking at this range and looking at the discount part of this range to be reached first before we continue buy side. It's still bullish. And because of that, it was the reason why he bought gold and GU, which played out very nicely. Right. And I'm also thinking about that. What do we do? Do we see continuation lower going into tomorrow? Right. I would really try and think about that. I would look for that. Right. If we open tomorrow, we start to run higher. That could lead into some sell side. And I would target, this fair value gap for a drawn liquidity there. And maybe that will be buys for, pairs like GU and EU and all of that. Right. So what am I saying? That we have from here, I think the movie started already, but if we're still there, we would see it happen tomorrow again. That we actually see buy side from levels like this. One of the levels I would like, if I'm just really off of the top of my head, looking at levels here, right? I would like that we return back down here. There's so much shit that is inside of here. Let me take away. I think I showed you GU yesterday, and I said I could be selling above here, but when price got here it was before CPI. And I'm grateful because that would have been a loss, a very huge loss if I was selling there. All right. But now what I'm saying is if DXY goes lower, we can see this is an obvious draw of liquidity. This is an obvious draw of liquidity that above that high. So it's going to be Monday low of the week, and then we rally all the rest of the week. If we have DXY go lower. Now, if DXY continues to go higher, then we would see these up close candles inside of here start to send price lower. So again, it's still neutral camp for me, more neutral for me on currencies, but I'll be watching going into tomorrow. I would share, my ideas with the inner circle as I always do, right? So if that's something you're looking for, we're currently closed, but when we are open, I would let you know. Just follow this channel every single day. Put a thumbs up right now if you have watched up until this point. I really appreciate you. You're a real OG, and thank you for supporting this very, very tiny channel that in some time it would not be so small again. All right, family. That's kind of what I want. I don't trade EU, but I think the same thing is what I'm looking at. If we're going to be bullish, right, then the EU is, let me just not talk about EU for right now. Right, lastly, let's look at NAS because, NAS helped me pass my account yesterday. So we can look at what happened. You see, the sell side of yesterday from all of the pairs was reversed today by CPI. And I think that was just a power play. Very, very good when I think about it psychologically. Right. Very, 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 very good. And I would have fallen for it also if I was trading. Right. But again, for this, it looks like we could be returning back into equal highs here. Right. And then maybe all the way back up. So it really looks like the XY can really go lower. And we'll be watching how that plays out. Right. I really don't have a solid bias, right? If you would, but I've told you my parameters and now I'm looking at it. And maybe more particularly on gold. Right, that's where I kind of will be looking at to engage something tomorrow. And again, you can share me your thoughts, what you think is happening. Do you think gold is going to be selling? Do you think gold is going to be buying? I would like to see that. But for right now, I'll be signing out and I'll see you tomorrow. Best of family.